Good morning. David Cohen here, Vice President at PFL, bringing you last week's North American rail, energy, and macro update. Let's break down what's driving the conversation. The Dow closed at 44,946, up about 770 points for the week. The S&P 500 slipped Friday, but ended the week 60 points higher, closing near 6,450. The Nasdaq also eased Friday, but gained 173 points week over week, finishing at 21,623. Oil traded lower last week, with WTI crude settling at 62.80, off just over $1 for the week. Brent crude finished at 65.85, also modestly lower. WCS traded at an implied 54.35, roughly 11.50 under the WTI CMA. Inventories, on the other hand, were a mixed bag. U.S. crude stocks rose by 3 million barrels, now sitting 6% below the 5-year average for this time of year. Gasoline drew down, distillates ticked higher, and propane rose sharply, with propane closing the week at 67 cents per gallon, down 5 cents. Overall, petroleum inventories increased 7.5 million barrels, while refinery runs and imports both moved modestly higher. WTI is set to open this morning at $63, up 20 cents. On the rail side, North American rail volumes rose slightly year over year. Carloads were down less than 1%. Intermodal volumes were up about 1.5%. Performance varied. CSX and NS in the east saw gains. BNSF led in the west, while UP slipped modestly. Canadian carriers were weaker overall, especially CPKC, which fell over 20%, with forest products down sharply. Rig counts were steady in the U.S. and up slightly in Canada, but still well below last year's levels. Here is what we're watching out there for you folks. Congestion in Europe's biggest ports, Rotterdam, Hamburg, and Antwerp, is causing ripple effects at East Coast gateways like New York and New Jersey and Savannah. The result: vessel bunching, rail surges inland, and equipment dislocations that make just-in-time shipping less reliable. The Permian Basin continues to grow. Billions in new gas processing capacity are coming online, highlighted by Enterprise Products Partners' recent $580 million acquisition. The downstream effect will be long-term demand for tank cars and covered hoppers, moving petrochemical products out of Texas and Louisiana. We are also watching the return of Venezuelan crude to the market. With Chevron's waiver reinstated, Venezuelan heavy crude is flowing again to the Gulf Coast. That extra volume is pressuring Canadian crude by rail economics as waterborne supply competes directly. WCS spreads are widening, and Canadian shipments are at multi-year lows, aside from undiluted bitumen that can't move by pipeline. The big picture: markets are steady, oil is range-bound, and rail volumes are holding up. But the real story lies in shifting trade flows, new infrastructure, regulatory headwinds, and evolving supply chain risks. For the latest on railcars for sale or lease or customized rail solutions, please reach out to us at PFL Today. I'm David Cohen. Thanks again for listening. Stay prepared, stay positive, and take what comes one day at a time. Please read today's rail report. We do it all for you. Thank you. Have a great week.